So Cathie Wood and ARK are big fans of Bitcoin. However, when it comes to Ethereum, Cathie has chosen to not share as many thoughts. She might drop hints every now and then in her weekly roundups, but she doesn't usually go too in depth. Recently though, in an interview, Cathie outlined her exact thoughts on Ethereum. She explained whether ARK are bullish on it or not, and in fact, she even answered the big question. Is she more bullish on Ethereum or on Bitcoin? Which does she think is the better investment? Okay, so let's get straight into it, and I'm not going to make you wait. Instead, let's jump straight into this first clip.
We've been evolving our point of view on Ether. When we started our analysis, we were pretty much, and this was with Chris, Bitcoin was what we needed to understand first. But we were keeping our eye on all of the other assets, and we stuck pretty closely to the thesis, the FAT protocol thesis that Chris's partner Joel Monegro came up with at Union Square Ventures, which says that the value accrual will take place more at the currency level. And we believe there would be only a few currencies in the world, much like there are today. We thought Bitcoin would be the reserve currency, and we were looking for the other currencies. And Ether was showing up as a very strong second. And I have been surprised at how Ether and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. One of those needs is yield out there. And we see that in the fixed income markets. The ridiculous rallies that have taken place, taking junk bond yields down to just a couple of 100 basis points above treasuries. That's kind of nuts. So this hunger for yield is being satisfied by a much more efficient financial ecosystem. And I think many more people are more open-minded to it as well. Let's see, one of the things that has struck me from the beginning, and when Chris started at ARK, which was very close to the beginning of the firm, I remember saying very early on, follow the developers. Well, using that metric, Ethereum is off the charts, whereas Bitcoin is steady as she goes, still increasing, steady as she goes, but clearly Ethereum, decentralized finance, NFTs, have hit a responsive chord. I think bringing the creator community into this ecosystem is, helping it go a little bit viral more quickly than we would have expected.
So you guys are bullish then on Bitcoin, bullish ETH.
Yes, indeed.
I would add to, when ARK was beginning its investigations into crypto, Ethereum didn't exist.
Right.
If you go back to 2014, it was just an idea. When ARK first established its Bitcoin positions, Ethereum, the network, had just launched a few months prior. I remember, knockdown, drag out fights, arguments in ARK brainstorms. I mean, that's putting it too harshly, but contentious debates around the DAO in 2016. ARK is full of varied viewpoints, and I think that's part of its strength, right? Allowing everyone to express their viewpoints. But when the DAO happened in 2016, that was, at least for me, the catalyst of, oh my God, this thing just raised over $200 million from people all over the world. Yes, it got hacked. Yes, it's a disaster. But the fact that this happened is indicative of power, basically. And I would say that with Ethereum, in particular, because ARK dives so deep into the tech and wants to understand things through and through, Ethereum has had a lot of problems in a way in which Bitcoin hasn't. And so also as a at scale investor, even though ARK is as risk tolerating as they come on the institutional side, the risk profile of Ethereum for a long time, I would say, wasn't suitable for ARK. And it's in the last year or two entered a sweet spot of suitability for ARK. And I think I've seen the whole team embrace that and say, okay, even though I'm not a explicit part of the ARK team, we're still in close contact. I see, a focus and openness to what's going on in the Ethereum space.
Chris will always be an important part of the ARK team, and his DNA is in ARK. I want to reflect on a meetup that you organized, Chris. Remember, we brought the Bitcoin and the Ether developers together, investors and developers, in our first office, one of those startup offices. And Chris was preparing. He was thinking about how to manage the discussion so that there would not be a war. and what I remember at the time, as I was sitting there and I was listening to these developers.
This was late 16, early 17, just to place people. So Ethereum was in decline. It was at $6 or $7.
$7. It was $7.
Yeah. We'd come off the middle of 16, kind of frenzy around the Dow, sold off from 25 to 7. Bitcoin was kind of pushing up, and we tried to the focus was to bring Ethereum and Bitcoin together. Anyway, go on.
Yeah. So, and what I came away with, I said, oh my gosh, this is crazy. This is so interesting, listening to the developers, but also understanding there would be a place for both. This was not an either or. That was a bit of an aha moment. The DAO, Chris came in and presented the DAO at a brainstorm, and I was fascinated. I was saying, wow, that's pretty wild. But then there were others on the team who were just pushing back and saying, this is going to blow up, and felt which it did. Felt vindicated when it blew up. But that, my experience in innovation is when you're onto something early, there are bound to be problems, and when it blows up is when you invest. That's when you really think about the investing. And I'll say, just in terms of Ether and the NFTs and the creator community, I was listening to one of Placeholder's calls, and they featured the CEO of Async Art, and I had never heard Async Art. I had never heard about this phenomenon at all. He starts speaking, and I'm on a walk, and I am smiling from ear to ear. I have not smiled that wide a smile since I first heard of the internet, just to give you a sense.
Wow. That's the impact that NFTs had on you. This idea of Async Art and what they're building on NFTs.
Yes. I was saying, oh my gosh, the layering, that sort of get the creators involved with this. This could go nuts.
And so, why? What did you see? What was comparable to the early internet, Cathie?
Just the awe of how new and differentiated, how a different way of thinking, a way to reward creators, which we've been looking for generations or forever, right? And this idea that you could have, a piece of art and then layer it and sell pieces of it off and have the underlying creator still get rewarded for, thinking up such an interesting idea. I just thought, wow, this is so collaborative. It is so collaborative. And that's where the world's going. That's how ARK is set up too, as being very collaborative and iterative in our thinking. And so that's what I felt when I heard the CEO of Async Art talk.
So it's fair to say that Cathie is clearly bullish on Ethereum. In fact, she even shared in this clip that she is bullish on the Ether to Bitcoin ratio, implying that Ether, in her opinion, may climb in value even more than Bitcoin. Now, for me though, there is one particular aspect which really jumps out, and this is what Cathie describes as the search for yield. So let's imagine, for example, that you're an investor and you're managing a lot of money. I'm not talking our personal holdings, I'm talking billions of dollars, an institutional investor. What you need to do is you need to build a diversified portfolio. You can't just hold stocks, you also need to hold safer investments as well, such as bonds. Unfortunately, there's a big problem. Today, the 10-year US Treasury yield is 1.33%. Now what that means is if you give the US government your money for 10 years, they'll give you just 1.33% back as profit every year. But considering inflation is already well above that, that actually means you're lending out your money and you're guaranteeing that you lose purchasing power every single year. And this represents really a wider issue. It used to be true that you could outpace inflation, even taking on just a tiny level of risk. Yes, of course, you weren't going to get rich and the return was low, but for institutions with billions of dollars looking for a hedge, this kind of thing makes a lot of sense. Today though, the risk required to outpace inflation is becoming higher and higher. There isn't really a risk minimized rate of return that does its job well in a portfolio today. However, as Cathie notes, one of the reasons that institutions are becoming so interested in DeFi is the ability to generate a yield. Now, before I go any further, let me make one thing really clear. I'm not talking about aping into a yield farm offering 5,000% APY. Clearly, that is high risk, far too high risk for institutional investors. What Cathie is discussing is the safer opportunities within DeFi, which offer single-digit returns and the ability to hedge your risk. Now, to you, that may not sound so interesting. Maybe you prefer that 5,000% APY. But to an institutional investor, this single-digit return, which with a low risk, is basically their dream. And this concept is being taken a step further as Ethereum prepares to transition to Ethereum 2.0, because when this happens, staking will go live on the network. And according to current calculations, staking on ETH 2.0 could yield around 5.4% per year. This 5.4% could be the equivalent in crypto, as the US Treasury yield is in general investing. Let me say that again. This yield from staking on Ethereum 2.0 could be the equivalent to the US Treasury yield in general investing. Yes, you can generate higher returns elsewhere, but this offers the ability to generate stable returns at a very low risk. Now, let's say an institution likes the idea of earning 5.4% per year, but doesn't want to take on the risk of something going wrong with Ethereum 2.0, or they simply don't want to withstand the price volatility of Ether. Both totally fair concerns. Well, through purchasing smart contract insurance, they can mitigate risk associated with ETH 2.0. And with hedging, they can also mitigate risk associated with price volatility. Now, maybe these additional costs bring the return down to, let's say, 4% per year instead of 5.4%. Still, this is 3 times higher than the US Treasury yield, and it is the first truly international, internet-based risk minimized rate of return. So to summarize, the launch of Ethereum 2.0 and the growth of DeFi could be the beginning of yields based entirely on the internet, which are accessible to every single person and institution around the globe. And in case that's not clear, that represents the incentive to bring people and institutions into the crypto market in a truly staggering way. So for me, the search for yields is something which could drive institutional adoption of Ethereum in a way that we have never seen before. But I'm interested to know what you think. Do you agree or not? Let me know your thoughts in the comments below. Thank you for watching, and I will see you again very soon.